Hello guys and welcome to Investing for Generations. So this will be the first part where I will show you one of my stocks from my portfolio and give you a deeper look uh, into the company, into the numbers of the company, why I bought, and also if I think it's a good time to buy right now. So let's dive into it. The company I want to talk about today is Factset. I don't know if you are used to this company, so I will say some words about the company, the history, and what it does. The company was founded 1978 in Norwalk, Connecticut. Factset provides data and analytic applications to banks, portfolio managers, funds, etc. And you can find the data on a lot of web pages about financials. Um, Big customers are BNP Paribas or even PNC Financials, or Wells Fargo is maybe the most famous customer of this company. The company have around 10,000 employees worldwide and a yearly revenue of $1.4 billion. So let's take a deeper look into the numbers and the financials of this company. Therefore, I want to show you my spreadsheet with the most important numbers. So Factset right now is trading at $293.85 with a dividend yield of 1.06%, which is not very high. But they have a very small payout ratio and a very high dividend growth rate over the last 5 years. It's 13% on average, and the dividend grew for the last 20 years, and right now I expect it just will go on like that because the company is not very affected by the global crisis right now. The revenue of the company grew 8.7% over the last 5 years, which is not very much, but very stable. There is a very stable grow into the company. And they have very good numbers when it comes to return on equity, return on investments. So this company right now earns money even we are in a big crisis. What is a little bit a problem is a very high PE ratio right now. It's at 30, and yeah, that's very high. I will say something about this a little bit later when I take a look at the current price. The company run on very high margins. The gross profit margin is 45% and the operating margin is over 30%. That's great. And also the balance sheet looks very solid. The debt equity ratio is only at 1.16, and the current ratio is even better at 2.63. So these are great numbers, and this shows me there is a very solid company right now. Every time I analyze this stock, I also look for the current management, and therefore I go normally to the website of the company, where normally you find a lot of information about the company and even so about the management. So just take a look. And here, if you look to the management team, a very important thing for me is to see who is there. Of course, I Google the names sometimes of the CEO at least, and see if there's comes something wrong up, like some scandals or anything. So there's nothing here. And another good point is to look how long other people stay with the in the company. And for example, here the CEO Philip Snow Um, he's very long in this company, um, and he's a CEO since 2015, and also stood with the company before for a long time. Um, since 1969, he's at the company, so there is something like a big relation to the company. So you can be very sure that you really stick to the company and he cares about this company for sure. And one point I really like in that is to look what happened to the stock price since the current CEO took over. And there we will just go and look at the price chart. And when we look what happened to this company or to the stock price of the company since Jim Snow took over, we see that the price is more than double since he took over. So that's a very good sign. And even now, of course, it was hit by the global crisis in March, but it recovered very fast and it's very close to all-time high. So hopefully the trend continues and just goes up. So what we found out is we have a very solid company here, a very good business. Um, but just take a look at the price because, of course, as an investor, even as a long-term investor, the price is a very important thing. And so what I do is first I try to find an intrinsic value in the company, and therefore I use the discount cash flow uh, method. And with that, I found an intrinsic value in my eyes of 270 USD. The current stock price is at $293, so above the intrinsic value, of course. And I bought the stock at the beginning of December for 258.95 US dollar. So under the intrinsic value, a little bit under the intrinsic value. Normally, I like it more to have a higher margin of safety. So, of course, the best, as Warren Buffett said, or Phil Town even said, as big investors, the greatest thing is to have a margin of safety as much as possible, and best at 50% or more. But that's very rare to get opportunities like this. So I'm very happy with the price I paid, even if it's just a small position I have right now. Because the price is high, I will not buy more. But if the price dips, if we maybe run into another crash, as so many predicted, I will buy even more. But we will see. Nobody knows. So, what the highlights and the low points of this of Factset right now? Of course, a high return on investment is a very big plus. The high margins are great. The current ratio is superb, and it's just a long-term solid uh, management there. So that's very good point. And this is that there are points which make me sleep very good and very quietly about this company. On the other hand, if you want, so the low points are the relatively slow growth rate and the relatively high price right now. So what's the conclusion? At least in my eyes, we have a very solid company with a good long term, which is a good long term investment for me. And I really want to stick with it for long term because I think all of this market of data and data analysis just growing, and so I think Factset has a very good place and very good share in this market. But right now, as said, it's just too expensive to buy more. So yeah, just look what happened to the stock price, what happened to the market at all, and of course, what happened to the company. That's it for today. I hope you enjoyed. If so, just give me a thumbs up. And yeah, see you soon with another stock out of my portfolio. Bye bye.